So as we wait for the hundreds of people that are joining us today to come into the webinar, I just want to first of all say thank you to all the panelists who are giving up time this evening to share their knowledge on the secrets of raising money. I love this subject. I think it's one of the most asked questions within our community: how to raise money for your business, how to value your business. How does it actually work? It seems like a dark art to many. We all read the headlines in platforms like TechCrunch where people have raised 300 million, 500 million. And I know people are really interested in how it all works. And today we have an incredible group that are going to share their knowledge with you on how it works. I'm proud of the Purposeful project to be teaming up with Seed Legals on this webinar today. We have a mission at the Purposeful project to help 10 million people start and grow a business of their own and not feel alone doing it. It's a very exciting mission where we're across all social media platforms. And of course, wherever you're listening to this webinar from right now, we basically put up content every single week to help people for free learn business. I left school at 15 years old. I felt like school let me down. It didn't give me the tools I need to function in the real world. And we're on a mission to fix that. We're on a mission to give people the knowledge to start a business if they want and have access to being able to live their purpose. Starting a business might not be for everyone, but certainly we want people to have informed consent, the ability to start a business if they wish. So I think we'll kick off as everyone's starting to arrive. And I think the first person who's going to share a quick intro about himself, and then we've been sent a load of questions, which we'll start to answer. And just before I bring Johnny up, who's the account manager and investment expert at Seed Legals, I will just say we will take questions from the audience at the end. Each guest, each panelist will have Q&A for about 10 minutes. And at the end, if you have a question that we haven't covered in the download in the early part of the webinar, you can ask it at the end and even come up on stage if you wish and share what you're doing and ask your questions. So let's kick off. Johnny, would you mind introducing yourself?
Yeah, absolutely. Hello, everyone. I'm Johnny. I work for Seed Legals. We're now the largest closer of funding rounds in the UK, amongst other things. I've been with the company now for a handful of years, seen ourselves as a startup scale from the early doors to now with over 2,000 rounds under our belt and about 200 for myself. I've seen the good, the bad and the ugly of startup raising, and I'm hoping to share some of the goods, some of the bads we can all learn from. And yeah, really looking forward to this. Prior to this, I was with Startup Grind, spent some time up in Glasgow, where I'm originally from, running that. And I'm an ex-founder myself, so yeah, I know how hard this can be, and looking forward to sharing some thoughts with you all.
Thank you, Johnny. All of the panelists today, their bios will be in the comment section. So if you want to follow the individuals and the companies that they represent, you can, and the links are in the comments. Well, why don't we kick off with some of the questions that people have been asking about raising money. And Johnny, I wanted to ask you, maybe we could start off by understanding the different rounds of startup funding and how do you know which one to pick as a founder? Where do you start?
Yeah, it's a good place to start, actually. And it's very common and very normal when you first start a company, formulate an idea, start to realize that there's something more to it, establish it's not just you and your mum that believes in this idea, but there's plenty of people out there that can benefit from what you're looking to build. And next up, we realize, okay, we now need to start building this thing. So think, how much is it going to take to get us from where we are to be this business we envision? So great, okay, this will be 50 million and it'll be perfect. Now, that's all well and good. But the way you want to look at startup funding is more in stages. So you have the initial stage, usually known as the pre-seed or the friends and family sort of round. And this is your initial get your going phase. Now, the reason you do it in stages is because as much as 50 million in the bank right away sounds amazing, and you'll occasionally see these sort of rounds, generally speaking, you don't want to sell more than a certain amount of your company each round. You don't want to sell the whole company in the first round of investment. Based on our data, we see on average you want to give away about 15 to 20% per round. And what that ends up working out as is, okay, if we need 50 million, then we need to value the company at 250 million to get that cash in. But if it's just an idea, as an investor, it might be hard to view your company and say, great, that's already worth that amount. So instead, you want to look at in stages. So you might have the initial one, you can either bootstrap through or you do your pre-seed. Usually it's circa, in the UK, circa 150K to maybe up to 500K. And we'll go into valuations in a bit, but the idea is you can justify somewhere about $1 million to get you going. And then you use those funds to grow the company, build out the MVP or the core product, just get initially going, at which point you can then approach investors with all the progress you made. And now you're looking at something like the seed stage. The seed stage, you're raising more, but now there's more backing it. You can put a higher number on the valuation. You then use that to scale out. And then you might approach future raises, Series A, Series B, and that's all about scaling. It's when you've got a tangible business underneath it, and then you can say, great, now I can justify raising 5, 10, 15 million at a higher valuation because the company's revenue generating. There's a lot more that the investors can see as well as the customers. So broadly, your stage comes down to actually like how much traction you've got so far, hard word to define, but all the core things, the shiny things you can show to investors. And that tends to be the stage and also tends to dictate how much you can raise at any given point. Sorry, Simon, I think you're on mute.
The classic. A great summary. Thanks, Johnny. So how do people decide their valuation? How do people get to that conclusion?
Yeah, so it goes somewhat hand in hand with exactly that. And I'm going to say with valuation, it massively depends on the industry you're in, on your own experience in the industry prior. It depends on the geography. So the same fundamental company will raise or be able to value their company a different amount, depending on whether they're based in London or Glasgow or Silicon Valley, will always be slightly different. And you can benchmark that against similar companies in your industry at a similar stage. But that, like, benchmarking is a great place to start. Look at people in the same industry doing something different and roughly where they are with number of website users or initial ideas, see how much they raise. You can usually work out the valuation. It's often announced for the large deals in places like TechCrunch. We also, like, to give you an idea for the UK viewers amongst us, you typically will see like initial idea concepts, some early people on the mailing list, maybe some wireframes. You can probably raise it somewhere between about $1 million to 2 million. Typically in the UK, or at least in London. When you're at the point where you have a physical product or a website, a platform, something they can play around with, and perhaps you've gone to market, you have some initial beta users, or potentially you now have some paying users, 5, 10K a month, which is the next stage up, you can now look to raise the sort of seed stage at somewhere between a 2.5 to 5, 6 million valuation. So wide range. But it also dictates those that are just about to go to market versus those that have been in market for a while and have a bit more of a proof of business model and proof of concept. And then for your Series A, it really like gets into the metrics. I like to think of it as a bit of an art meets science. At the very early doors, it's a bit of an art form. Not quite stick your finger in the air which way's the wind blowing, but there's definitely an element of storytelling, the team, the future prospects, but a lot of like selling the vision as a founder. Whereas at the later stages, when you're revenue generating, you can start to lean upon multiples. Like you'll quite often see a 10 or 7 to 15x annual recurring revenue to give you an idea. You can look at discounted cash flow. It starts to become much more of a science, and that really starts stepping in whenever you're raising the multi-million pound rounds, kind of Series A plus. That's where that starts to step in.
Got it. And if people are thinking of raising money for their business, what do you suggest people prepare in advance?
Yeah, it's a good one. Main thing is you want to make sure your house is in order. So if you're early stages, you want to make sure that your cap table's all where it should. Everyone has the equity they should prior to the first raise, because as easy as it is to set up a company in the UK on Companies House, and your co-founder might have done it, put themselves as the only shareholder, you probably want to get yourself on there for the 50-50 prior to the raise, so you don't have to worry about things like tax implications or otherwise. It just makes sure your cap table's squeaky clean coming in. You also want to potentially put in place founders agreements just to make sure that your roles are all defined. You might look at founder vesting. So if your co-founder walks out the door 3 months in, half the company doesn't walk with them. It can be quite hard to undo that. And the main thing after that is you can then start to look at approach investors and look at the investment readiness once the house is in order.
And finally, before we move on to Kasia, for a lot of people, they might know there's some different structures, but can you tell people a little bit about SEIS and EIS and how do people apply for these?
Yeah, absolutely. So for those unaware, the SEIS and EIS, it stands for the Seed Enterprise Investment Scheme, Enterprise Investment Scheme. It's a scheme for UK companies. The general idea, I think, is a really good one, where instead of a high net worth putting their money into a hedge fund, the government wants to incentivize people to back the innovative companies coming out of the company, which in turn will create new jobs and grow the economy further and basically just build innovation. So the way they do this is they offer a very attractive tax incentive to individual investors in the UK, which allows you to invest, let's say under the SEIS scheme, which is for brand new companies, allows you to invest, and the investor will get half their money back off their taxes in the UK that year. So they get 50%, 10K equals 5K back. Will also pay no capital gains tax for lifetime investment. And it also means that there's additional loss relief if things don't work out. So the idea is to make it a lot more attractive for them to invest, but it does also mean that they are really, really keen to then lock in that tax relief when going for the investment. So it's important to be prepared for that. HMRC are the ones that run the scheme, and it's possible to apply to them for advance assurance, basically saying we've pre-reviewed your company and your idea, because not all ideas are eligible. It needs to be risky enough, and there's plenty of resources online on what is and isn't eligible. But you can write for pre-approval to say, okay, provided that we've reviewed your company, provided that they invest under the right rules, they get ordinary shares just like the founders, which put everyone on a level playing field, it means that they will grant the relief. So that's definitely worth getting in order. I'm keen not to spend too long talking about seed legals. It's all about value here, but it is something we can help with. Is something you can do yourself online. And as I mentioned, there's a ton of great resources on that, but that's part and parcel with getting your house in order, along with preparing your term sheet so that when you do approach investors, you know what you're doing, you sound like you know what you're doing, and it means you stand a much better chance of locking in those funds.
Great. I have to say, the SEIS and EIS programs blew my mind. I've invested in 4 businesses recently, and I got half the money back so quickly, which allows me to invest in more businesses. So in some respects, it's kind of a cash flow thing, but it certainly helps. I was based in Hong Kong for 20 years. It doesn't have that structure, so I wasn't used to getting money back when I put it into a company. So the UK has really got an edge there, and we'll come back to you. There's lots of questions dropping into the comments on TikTok and on this webinar, so we've got questions for you. We'll come to them at the end. So Kasia, thanks for your patience. Would you mind unmiking, telling everybody a little bit about you, your amazing company, and what you do?
Hi, everyone. Nice to meet you. My name is Kasia. I'm an associate at Cedars. So my role is to advise and assess businesses on equity crowdfunding, help them figure out if crowdfunding is something that might be useful as part of their investment strategy. I specifically work on the sustainability and food and beverage deals, but it's worth saying we're fairly sector agnostic and work with businesses kind of all the way from 150K to last year, the largest raise we did was 18 mil. So kind of big range of companies there. For anyone who doesn't know, Cedars is an equity crowdfunding platform.
Great, 18 million. Wow, that's crazy, isn't it? Well done. So well, let's talk a little bit for those that don't know about the different types of crowdfunding and what type of crowdfunding people should choose, in your opinion.
Yeah, absolutely. So broadly speaking, there's 2 types of crowdfunding. One is equity-based and one is non-equity based. So non-equity is something like Kickstarter. There's kind of a variety of these out there, but typically it's something that is perks-based. This is very common for very early stage product-based businesses that need to get some money together to kind of figure out their first prototype, cobble up together proof of concept, and in exchange customers get sort of something to the effect of a free product or early access or a heavy discount to the product. So often this is kind of consumer facing, and it works very well for kind of hardware businesses. Equity-based fundraising, obviously you're giving away equity. So in the context of kind of seeders and using an equity crowdfunding platform, the way it works is that a business will put up a campaign on our platform in which any member of the public can invest, usually from £10 upwards, in exchange for becoming a shareholder. So the idea here is there's kind of different ideas based on what your business wants exactly. But typically, you know, one, it's a way of raising capital just like any other, but for consumer-based or consumer-facing businesses, for instance, it's a great way to get a community behind your brand, one that's really heavily engaged, that's your stickiest customers, because they are both emotionally and now financially incentivized to make the business succeed. So they are incentivized to be your most loyal customers, spread it to all of their friends and family, engage with you on social media, that kind of thing, because if you succeed financially, they will be rewarded. With other businesses, particularly sort of kind of impact-driven businesses, there's kind of a more like ethical argument to it, in the sense that it's a more democratic way of raising investment. So particularly sort of in the sustainability team where I work, you know, there's an argument that we want to democratize the green revolution, allow anyone to become an impact investor. I'm sure you've seen kind of all the news lately of ESG funds that have, you know, Amazon stock in them, and there's very little transparency. Whereas with us, you can kind of invest directly into, say, a floating wind turbine, if you wish.
Who doesn't want to invest in a floating wind turbine? So can you perhaps quickly share with us, in your experience, kind of do's and don'ts of crowdfunding?
Yeah, absolutely. So with any equity crowdfunding platform, kind of starting with the do's, the best way to think of us is as a co-investor. So typically what businesses will do is they will bring some kind of anchor investment into the round. So this is typically some money that is kind of negotiated with offline with either friends and family, angels, etc. And what that does is set the terms for the round. So you agree a valuation with them, and for us, that's sort of a vote of confidence towards your valuation, instead of kind of, yeah, picking one from thin air. Then what we're able to do is reflect those funds into your progress bar. And what this does as well is build momentum in your campaign. So the kind of first do is really kind of getting some cornerstone investment together, be that from angels, from friends and family, from high net worths. It can kind of look like anything, but the main thing is we need someone to set the terms for the round. The other kind of do is generally being more proactive with the round. We say the more love you put into a crowdfunding campaign, the more you're going to get out of it. So I mean this in two ways. So one is that with a crowdfund, you want to promote it as much as you possibly can. You want to make sure that everyone knows you're crowdfunding, that you're posting about it on your personal kind of LinkedIn, for instance, and also your company socials, and really engaging your customers and your personal network and anyone who might be interested. Because what it does is momentum builds momentum. With crowdfunding, there's definitely a psychological component to it. And the more people who know about it, hopefully the more investment we get. The other kind of side of this is making sure that you're responsive to investors. And I think generally with your kind of fundraising efforts, it's really worth bearing this in mind, because I've definitely seen founders who kind of go, you know, a couple weeks or a couple months without following up with their investors, even if it's just to nurture the relationship. On a crowdfunding campaign, there's kind of a discussion forum where investors will ask you questions about the business. The faster you respond to those, the faster you get on the phone with anyone who wants to, generally the better for the campaign. In terms of don'ts, typically we say that crowdfunding campaigns might fail for two reasons. One is if the valuation is too high, and particularly in this current climate, what we're seeing is that a lot of investors, not just crowdfunding investors, are very valuation sensitive. There is kind of this conception out there that crowdfunding has very, very high valuations. And as a result, sometimes we have founders come to us with kind of valuations that are, 100x revenue multiple. But just to kind of bring that preconception down, our investors do look for kind of market valuations as well. The other kind of don't is kind of the inverse to the first point, is if you're unengaged with the process, if you're kind of not putting a clear timeline in place, not committing to it fully, not responding to people, that sort of thing.
And how much money should people raise? Do you have a view on this?
Do you mean sort of generally or through the crowd?
Yeah, well, in general, but through crowdfunding, do you see there's certain amounts that are too much or not enough? Is there a kind of a rule around this?
There's no kind of hard and fast rules around it because we, as I mentioned, we work with businesses at kind of every stage. So the amount you raise, as Johnny mentioned, should be kind of in relation to the stage of business that you're at, your fundraising needs at that time. And then in terms of raising from the crowd, the way it kind of works is that you'll initially get on a call with one of us and we'll chat through the round, chat through what's kind of possible, because every business is so different. You'll have different community sizes, different kind of personal networks you can tap into. And so what we do is we try to interrogate that a little bit more to help you figure out what's kind of useful.
Wonderful. Loads of questions coming in for you as well, but we'll move on to Andrea and come back to you in a moment. If you want to connect with Keisha, just to say all of the panelists' personal LinkedIn and the company contact information is in the chat right now. But Andrea, do you want to introduce yourself and tell us a little bit about what you do and your amazing company?
Yeah, sure. So thanks so much for asking me to join the panel today. I'm Adrienne. I'm co-founder of And Rising Ventures. So we are a creative ventures firm, which is something you might not have heard of. It's an alternative type of capital, and we invest in early stage companies. Our background and expertise are all from brand and marketing. So we've either run agencies or worked at and with brands across most sectors. And we've helped many of the brands and partners help scale to success. So the likes of Seedlip, Vivera, Sweaty Betty, Duolingo, etc. So most of them being acquired, and the odd brand like Duolingo, for example, IPOing. So we decided to launch And Rising Ventures nearly 3 years ago. And that was to support companies that we really see in the same way with the same skills, using creative capital to launch and scale their businesses. And our focus is really on championing positive change. So the types of investments we're looking for are clean and conscious creative products and services. Health tech is one particular area of focus at the moment, especially where it kind of intersects with food and drink innovation. And the types of investments that we have in our portfolio, brands like Tonic Health, which is high dose natural vitamin brand, and Healy, which is a new app in the US that maps clinical nutritional data and consumer food tech, and helps manage chronic illnesses.
Wow, wonderful, amazing what you guys do. So one of the questions we were sent in that people wanted to know was, how do you find the right investors? Yeah,
so each investor is definitely looking for something different, and there's so many investors out there. I think broadly, and it's obvious kind of from investor and VCs websites, they publish their fund philosophies. They are defined by sector often, so it's space or deep tech, consumer, and also by stage, so pre-seed, seed, series A, B, C, all the way up. And then their kind of normal associated ticket sizes in terms of the raise amount that you're looking for. So that's all kind of like quite easy to find information. I think often very specific information criteria isn't published. Investors by nature need quite a large volume of opportunities to kind of filter out the best ones. But no investor wants to miss out on finding the one. So I think kind of keeping some of that criteria hidden in the background is so that they get this volume of inquiries kind of coming through to filter. It's hard to know if the published criteria is up to date. So I think, obviously so much has changed in the last 12 months. Which criteria is a guide versus which is a deal breaker is hard to tell. For example, we've already kind of mentioned ARR, annual recurring revenue. This is one of the easiest indicators that a company can successfully acquire and retain customers. So whether you've hit product market fit, most will ask for a minimum, which is normally around the £1 million mark, $1 million mark, if you're looking at VC investment. And most investors, if they are publishing this as part of their criteria, they're probably not going to deviate from it. I think, in fact, we're seeing this kind of creeping up, if anything. So those that were previously seeking kind of $1 million as a minimum are now asking more for closer to 2. I also think, not to get too sidetracked, but there's lots of different metrics that are kind of banded around. And one I think that there's quite a lot of debate around is LTV, which is lifetime value. I think it's a more considered metric and something that you should definitely kind of have a view on in terms of a forecast when you're meeting investors. So it takes into consideration a mixture of things like purchase value and frequency and churn, and so can provide like a wider context around why cost of acquisition might be particularly high, and gives you a better understanding of opportunities and barriers to scale. I think for us personally, we're always looking at what is the value and expertise we can bring to a business. So we operate a model across our portfolio called Creative Capital, which is better known as sweat equity investing, and it brings kind of value and expertise beyond cash. So I think, for context, if you're looking at a typical consumer round, as much as 70% of the raise can be used for marketing resource. So it's definitely an alternative option to raising as part of your round, and can be an effective way of creating a scalable marketing team, which is funded by equity. And I think angels are kind of similar in their approach, in that they aren't bringing just cash, they're bringing a kind of incredible value and expertise and connections. And so asking yourself kind of why, when you're looking for an investor, why is that particular angel or a business like us, which is offering kind of alternative capital, why would we want to invest our money in your brand, is a helpful exercise to kind of do upfront, because it could be that they are just that it's a personal interest, it's an industry that they're expert in already, that they are looking for a more active role in the company, which has its kind of like pros and cons. So it really depends on kind of, what you're looking for in an investor, and kind of trying to match that with obviously what they are looking for as part of their criteria and personal interest.
So much useful knowledge there. Thank you. If people are thinking, okay, I'm going to raise money, I guess, what questions do you think investors will be asking people these days?
So I would normally start with kind of a simple explain your business model and opportunity, and then specifically looking at kind of questions around revenue and key business numbers if that business is post revenue and is launched. So just having all of those stats like really easily available, whether they're in a deck, and that you can make sure you can answer questions in a first meeting. So forecast for that year, month-on-month growth, year growth, margin, LTV, things like ROAS, which some of you might not have heard, at return on ad spend, looking at how many customers you have today, and just any insights and information on that, and also questions around how much you've previously raised, so that you can kind of get a gauge on cash burn, what that money's been used for previously, and then how much you're obviously raising as part of the current round, and valuation, if you've got kind of, if there's a lead investor on board already, obviously understanding what, if that valuation's been set yet, or whether that's kind of part of the discussions to take place. I'd also think kind of looking at maybe more as a first meeting rather than as part of the investment deck, but identifying the obvious kind of investment rationale. So understanding for us, how is this business positive impact? So again, it depends on kind of what individual investors are looking for. What is the kind of background of the team? what's the total addressable market? I think for us, focusing on marketing and brand, understanding what that bigger opportunity would be, and you know, what kind of work you've done to identify your audience is really important. You know, proprietary tech, IP as well is definitely something that I think most investors are interested in. What have you got that other people can't kind of automatically copy, or they can't copy quickly? And then, as we are living in a kind of changing world, are there opportunities for diversifying revenue? You know, where can the brand kind of, where it might start is where it might not end. So, you know, how can you look at the journey in the long term as well? And then also just the established risk. So if it's a new concept, you know, that is a barrier. It's a potential opportunity, but it's very expensive to change kind of consumer behavior. For us, that's a really interesting marketing challenge, but for other investors, that might be, you know, that concept might be too hard to kind of to understand, and too much of a risk. And, you know, obviously things like breakdown of how you're going to plan to spend your investment. How has money been spent from previous rounds? It's all really important. And probably the last one, which I probably have loads of extra questions about, is the detail around kind of marketing plans. You know, how are you planning to acquire and retain customers? And, you know, what kind of marketing have you done to date?
That's amazing. So everyone listening, in a moment, we'll be taking your questions. So if anyone on the webinar wants to raise their hand, we can actually bring you up on stage. And all those folks on TikTok, Talia will drop into TikTok in a minute and drop the names of every single one of the panelists. I can see a lot of you asking. So Talia, if you could do that. So what about the cap table? I mean, for those listening that don't even know what a cap table is, basically, of course, it's the people that have shares in the business. And why is this so important? What's your take on the cap table side of things?
I mean, it's definitely a standard document. So I think everyone should just have theirs like up to date and ready to send at any moment. And it just shows the breakdown of company percentages of ownership, dilution, value of equity across each of the rounds. I mean, they can be quite different in terms of presentation, but I don't think it really matters. You can get a beautifully engineered spreadsheet and you can get a really kind of quite a simple list, but I think as long as they show the information is accurate, you can see the split between equity, debt, current ASAs, any options that are yet to vest. So having it in kind of just clearly kind of divided sections. And also it can quite quickly at a glance confirm questions around things like founder control and ownership, and flag if any shares have any preferences against them.
I was recently involved in a startup where one of the people on the cap table wasn't liked by someone that was thinking of investing, and they didn't invest because they didn't like the other person on the cap table. So back to what you were saying earlier, really, right? Make sure you pick the right investors, because it can determine what people's perception of your business can be, even if it's not necessarily your choice, right? I'm sure you've seen that yourself. Yeah,
I mean, you can see someone on a cap table as a positive and go, this is definitely, you know, someone I can immediately give a phone call to, and that is exciting to be part of the team, and it can be a massive plus. I've never seen something where it's been like a huge negative, but I mean, most brands have got really long lists of angels that take part in a pre-seed round, because that's fairly standard, so you can get quite lengthy cap tables.
It's something I've seen behind the sscenes quite a lot, though, with the investment world sometimes, where someone doesn't like someone else. But it's why it's important to make sure that you're aligned with the investor you've got, because it can determine whether you'll raise money in the future. But your best tips for someone who needs help closing the round, just to finalize the questions we present for you. I mean, this seems to come up a lot. People want to close a round, but they don't know how to get the round closed. And any thoughts on this?
I mean, this is definitely the hardest question, especially in the current climate. I think I would plan to kind of look at raising a range, and not be kind of have a really set amount that you're looking to raise, and options within your business plan for kind of each scenario. I think there's a lot of people recently that I've met that have actually closed rounds early just because they've hit a number that they're kind of pretty comfortable with, and closing the round has just become really difficult. And so that is always a kind of a first and quite obvious option. If you have a network of angels and investors from a previous round, I think leaning on them. I mean, they're the people that have supported you from day one at the earliest part of your journey, and an open ask can be quite a helpful tactic. So even if it's a small amount, rather than a kind of closed one-on-one conversation with people, an open forum like a group email or a board meeting where it's kind of everyone's putting in together collectively as a supportive group, I think can be really helpful. If it wasn't part of your main raise, obviously kind of platforms that naturally raise momentum like Seedrs can be really helpful to kind of, if you've already got that kind of anchor amount of money and you're looking to complete your raise, that it does take a little bit of time, obviously, to kind of set up those campaigns, but that can be a really effective way of closing the round and building momentum. I think FOMO is like an incredibly powerful thing, and people don't want to miss out. And I think, again, it sounds really obvious, but if you've got an email database, especially if you're a D2C brand, being able to kind of email out to existing customers, include them in something like a crowdfund, is a really useful tactic. I think if they've tried the product and they like it, they're more likely to kind of to want a piece of owning it. There's also things like grants and prizes. You don't have to just kind of give away equity for every single part of the raise. It can give other investors, more confidence and show traction. PR from prizes, I think, can be particularly helpful as a way of raising kind of alternative capital, and then the same with accelerators and incubators. I mean, there's so many ways to kind of raise now. They've all got kind of different reputations, so you have to do your homework, but most of them do come with some element of capital funding. And then obviously like something like Creative Capital, which is our model, products like Forward Advances will also offer things like cash to be able to use towards marketing, whether it's virtual cards or whether it's just a small injection of cash, which is meant to be used for marketing. That's an alternative way to potentially deliver part of the plan. So just looking at every penny and analysing, how can I get this paid in a kind of, if it's not working in a traditional way.
Wonderful, great download. So if anybody has questions and feels brave enough, you can raise your hand now, and Talia will bring you up on stage. Just while we organise that and people come up onto the stage and ask questions, I'm just looking now at you folks on TikTok if you have any questions, and I'm going to go through the questions in the Q&A section. And so Zoe Dunn is asking, what if you are a CIC with no shares? Any thoughts on that?
I was wondering if that one was going to come up, because that's one I can't answer fully. CIC with no shares, typically investors take it with a grain of salt, not an area of great expertise in. But typically when investors are investing, they are looking to do so to, they might be impact investing, everyone has their own motives, but generally they want an element of seeing a return in capital through one form or another, which is usually why the majority of companies C raise are some form of limited companies with a shareholding, because the share structure allows the company to grow and then eventually exit or IPO with a clear structure about payouts and otherwise. So you want to think about that, and also want to reflect this now onto a few other questions I saw in the chat. So Adrian covered very well there, is you want to put yourself in the shoes of an investor. It's easy to be a founder and say, right, I need money, who wants to give me money? But instead think, right, if I were an investor, what would make me pick this business over another one? And the different things that will get you stand out. You want to approach the type of investors that predominantly invest in your industries, people that previously built a company in the industry that you're in and have sold it. They might get your idea in a heartbeat, thought, oh, we thought about doing that at this company, different priorities, but I see someone solving it and more likely to do it. You might get one champion, one angel, two angels, who can in turn really like the idea and introduce you to 5 or 10 of their friends, and suddenly a round fills up quite quickly. So I'm sorry it wasn't the most helpful answer for a KIC, but I know there will be research out there, of course. If anyone has anything extra to add to that, please do.
Any of the panelists have a thought on this, or is it covered well enough by John?
Yeah, just completely agree with Johnny. The only thing I'd flag is from the Seedrs side of things, we can't work with kicks, unfortunately.
Okay, Good to know. First up, Anthony, you've got your hand up. How can we help you?
Yeah, thanks, Simon. Thanks for panelists. It's all been great conversation. So I've got sort of two questions. They're both in the context of pre-revenue. So first, Kasia, you spoke about needing to get family and friend investments before you can go out to the seeders. How much would you need to get upfront in the form of the family and friend context? And then my second question was to you, Adrian, around you were talking a lot around performance metrics and a revenue and things like this. If you're in pre-revenue, what sort of performance metrics would you be talking to?
Cool, I'll take that first question. Yeah, so around the anchor investment, it can come from friends and family, but it can also come from kind of a variety of sources like angels, small family offices, that kind of thing. In terms of how much you would need for a raise, it also really depends on the kind of industry you're in, because pre-revenue businesses might be slightly more attractive, say if it's a fintech business versus a consumer business. So there's no kind of hard and fast rules around it necessarily. One rule of thumb that I would use with a grain of salt is that in terms of your kind of entire round, we recommend about 50% to come from pre-commitment. The way that crowdfunding works is that, we will set a slightly higher target than whatever you've kind of raised and then look to overfund to build as much momentum and get as much capital as possible in the business. So it sort of also depends on your flexibility around how much you can raise.
Thank you.
And in terms of metrics, if you are pre-revenue, I think if you are a consumer brand, you're more likely to be looking at a kind of forecast. I think it would definitely depend on the type of investment you are looking for. So obviously, if it's kind of friends and family and you're in early stages, they're probably not asking you for many metrics. I think angels would be more looking at a kind of business plan. So, how are you going after distribution if you're a D2C business? What are your expected metrics? What's your expected spend? At least do those numbers kind of match up in terms of your expectations. And then there's other, I think if you're looking at more a kind of tech business, a fintech or some kind of health tech company or app, you are again just looking at how are you actually affording to kind of build this, and less around kind of metrics that are outside of a kind of forecast, because obviously you haven't launched yet. So I think it's more common in tech. I think often with the consumer product, you're kind of bootstrapping it using family and friends and your own investment to be able to get those very initial sales and that distribution as a kind of proof of concept.
Thank you.
Was that useful, Anthony?
Very useful. Thank you. I've got many more questions, but I'll stop there.
Okay, we'll drop them into the comments if we've got time at the end. Lisa Mitchell, do you want to unmic and ask your question to the panel?
Hi there. So just in terms of, the perspective of like a sole trader and someone that's in relatively early stage, like I'm just sort of looking for some more general advice in terms of, moving forward like in a logical sequence, because when you're a one person team, it's the potential for things to pile onto your task list and become overwhelming is pretty big, and particularly when it comes to like the funding side of things. So it's more of a general question on advice about that, and what an easy approach basically to begin.
Does your business need to raise money?
Yeah, it does need to raise capital.
Okay, and how much do you need to raise?
It's a ballpark at the moment, but probably about 50 grand.
Okay, and very quickly, what does the business do?
I deliver holistic voice work to support people to find confidence, well-being and creativity. So it's person to person, but also group work, and looking at a blended model of delivery for both in person and online.
And why do you need to raise 50,000? What's the 50,000 for?
I just pulled 50 grand out of the top of my head because I'm still in that planning phase of actually trying to cost price the marketing elements of that. But essentially I'm looking at like raising the visibility of the online presence to actually be bringing in organic traffic. But yeah, also creating some more stable infrastructure there as well, and employing some people to support me as well.
Yeah, I understood. I think maybe this forum isn't the right forum to chat about what you're talking about, only because you're when raising money, sometimes you've got to first determine what you're going to spend the money on. And I've been in your situation personally in the 18 companies I built, and I got a co-founder to invest in the business and run the part I wasn't capable or didn't want to do. So there's so many different ways for you to go about what you're doing. If you're a sole trader, you probably need to think a little bit more about like what you actually want, where you want the business to go, and reverse engineer what the gap is. So if it's marketing, for example, perhaps you bring in a marketing co-founder. Maybe it's not about spending 50,000, it's just about finding someone that can help you do the marketing. If you wish, you can drop into our Discord and we can help you with that separately, because I can't think of a direct question for the panel around this right now, although I do want to help you.
Thank you.
One of the panel wants to throw their view in on this quickly.
Just two small bits of advice. I think for most founders, you're probably going to be spending forever a portion of your time actually fundraising. It's like never over. As soon as one round is closed, the next one's opening. So I think if you're trying to work out managing time, it's like just go 25% of my time dedicated to fundraising, maybe even more than that. There's also loads of networks to help with kind of sourcing freelancers. So the one that comes to mind is the Copy Club, where if you are looking for marketing support, you can pay a small fee to join their network as a sole trader, and there's literally will be like a section on there saying like, find a freelancer, how do I get someone to help me run some marketing ads?
Yeah, I think it's a very good point actually you're making. Sometimes with fundraising, people think that it's an easy process. You kind of stick it up online and that's that. It is an ongoing job, just like any sales job, really. And sometimes you're better off, and this was mentioned earlier, getting traction. And sometimes people will seek you out if you've got traction. So yeah, good advice there. And we dropped the Discord link in the chat, so you can go there and get some help to maybe figure out what your pitch would be, if fundraising is the right route for you, or whether there's another way to get you what you need and get the help that you need to make your business work. But thanks for coming up and asking the question. Next up, another Lisa Mack. Do you want to unmic and ask your question to the panel? Maybe not. Lisa, are you there? Otherwise, I'm now going to say your name wrong. Please forgive me. I'm dyslexic. I'm so bad with names. But Abdelia, please forgive me.
Is Abdelali, or maybe just call me like Delali. That would be like very, very easy for you. To be honest, I'm a very ambitious person, and I started a business which is called All My UK Business. So this business is based on making exhibitions and creating events and events planner, and bring a lot of communities who they are getting some products in their homes and bring them from their homes to the exhibitions and build their career and build their confidence. So that is the base. The concept of my business, and my business based on on 2 stages or 3 stages, helping these people build their confidence, and then build with them the product and make them their products attractive more to get more customers, and also doing the follow-up with them. And the issue what I have at the moment is a capital, and even we don't have a capital. We started in the first event, which was successful event, to be honest. And with my personal marketing, I've done a 15 footfall of 15,000 people who that came to, to this event, to be honest, and it was a really, really great. So I saw that I can't do like no more, and based in my experience in marketing and like how to create videos and stuff. So just me and two people with me, and we do like a really, really great job. So what we all ask at the moment is just like how we can get funded, because the venues is a very, very expensive, to do like more and work like in market, like in monthly markets, and help like more people. Yeah.
Okay, got it. So your question is a bit drawn out, so I'm trying to figure out what the actual question is, but I mean ultimately you're asking how to raise money, right?
Yes, it is.
Okay, so hopefully that's been answered in a lot of the questions today. Was there anything that we didn't cover today to help you figure out how to raise money?
To be honest, I'm struggling even to do my my business plan at the moment, and I'm doing like just working in parallel of working, and do like hard work to do just a business plan.
All right, yeah, I understand. Sorry, I'm keeping it a little bit short because the panelist time is very
it's right, absolutely fine.
There's other people in it, and I don't want to be rude, but maybe
no, it's right.
Listen, we'll put a link to Discord again, where there's 2,300 entrepreneurs in that Discord that can help you with a business plan. There's someone I've got in mind, a guy called Carbon Cody. He will actually help you for free do your business plan. So I wouldn't talk about raising money until you're very clear on what you need and how you need it. So go to that Discord and go ask the community to help you do that business plan, and then maybe that will circle back to you needing to raise money. But congratulations on what you've done so far. Sounds like you've built.
All right, thank you.
You should make sure you appreciate yourself for that.
Thank you very much.
All right, thank you. Rob Groves, you're up next. I'm Mike. How can we help you?
Is it me? Yep. Yeah.
Yes.
Sorry.
I'm assuming you're Rob. That's
yeah. I am. Sorry. Yeah. My question was about what are the real benefits of getting investment as opposed to sort of starting off with loans and keeping all of the shares to yourself. What are the other additional sort of benefits of getting other people involved and their money?
Who would like to take that one? I've got loads of thoughts myself on this.
Yeah, same as well. I'll hop in. I'll keep it brief. I think if we can all share in this. First things first, venture and just general investment isn't right for everyone. It's a really good question to be asking yourself, because when you sell, it's simple to say, okay, we'll sell some equity, and at time, we'll sell 20% here and 15% there. But I lightly mentioned in the chat earlier, as your company scales, your equity becomes one of your most valuable things. You want to protect it basically from day one. There is a trade-off, like equity, an investment in your company is done and dusted, which means that an equity investment will not put you under whenever that person comes back or entity comes back and says, time to pay up. So that's the balance of loans versus equity. A loan does need to be repaid in one form or another. And if you can't, it can sink the business. At the end of the day, though, if you can build on loans and people are willing to give you loans, it implies that you have underlying revenue, and it means you do maintain most of, if not all of your equity. It's how businesses were built way, way back. Venture capital or investment in general came about for companies that have potential to be absolutely huge, but have very high very high burn rates, a lot of money spent early on, which is why you need the initial upfront capital. And at the time, you don't have the revenue to support it. So instead it comes via investment. And that means that as you reach cash flow break even, profitable, and really start to scale, it can scale to a very large play. But it is one to consider. We did touch on earlier, there's many ways to raise money. It's not just investment. You can also look at loans. Grants are important. R&D tax credits are useful if you're doing something really innovative. And a number of other ways. And at the end of the day, the best sort of way of raising money is by selling what you're selling to your customers. It's look after the underlying numbers, and everything else, including the investment, actually tends to take care of itself.
Okay.
Good answer. Anybody else on the panel got an opinion on this? No. Okay. I mean, again, as Johnny said, definitely, it's not always the good idea to raise money. And so I think all the panelists have kind of said, do your research on what you actually need, and make sure you do need. I personally think, and I've seen this play out in the companies I've invested in, that some of the people that invest add a lot of value beyond money. And a lot of the investors can make the company work. they can help make the company work. They can open up doors, and they can bring a lot of value. There's also a lot of rubbish around that too, where people promise a lot of value and don't bring it. So you know, at the end of the day, if you can build the business through cash flow, if you can build the business through traditional banking methods, and you can build it through your existing network, maybe raising money isn't necessary. And there's an argument that that's a good way to go. My first successful company was a company called Fluid, which I sold to PricewaterhouseCoopers. I didn't raise any money for it, and when I sold it, I was pretty pleased that I didn't. But every business is different, and so what do you actually need is quite an important question to ask yourself. So next up, hopefully you got the answer you need there, Rob.
Thank you ever so much.
All right. Next up, Anna. Would you like to unmic and ask your question?
Hello there. Yeah, right here. Pleasure. Thank you everyone for the time. I'm going to try and shorten as much as I can. So my model is pretty capital intensive, my business. So it's, in summary, is a new sort of health members club that offers combined health treatments and examinations, and includes psychedelics as well, which is pretty cool. So the cash burn is really high, and you know, in the current times, of course, we're looking to raise 2 to 3 years, because God knows what's ahead of us. And one of my advisors, who is a very, very important guy in the UK, who likely will put some cash in, has been telling me to do an MVP. But it's really hard to MVP when your value add is actually on the combination of treatments, which is, of course, what where is missing in our health systems at the moment. So one of my solutions is to partition the different treatments, but the innovation is actually on the combination. So I was just wondering if you have any thoughts on this, because if I partition, of course, I would be raising, like the full model, I'm raising 5 million. The partition model, I'm raising 1, much easier to raise. But then, of course, my fear is that I'm building a complete new business, a different business than the one I intended to originally. Yeah, so I just wanted to hear views around the challenges of partitioning your vision and getting an MVP that doesn't dilute completely your brand and allows you to maybe build upon it over time to get to your vision at some point in time. Sorry, that was a long-winded question.
Yeah, no problem. I don't know if anybody on the panel wants to jump in. I'll just quickly say, with an MVP, sometimes it is about having one happy client and kind of a testimonial and case study around that. So I know there's a lot of technology probably involved and so on, but sometimes if you can just prove, let's say, that the medical benefits of what you're suggesting in a few samples, that's one way an MVP can work, all the way through to like just proving demand. So Dropbox put a website up and said, this is what we're going to build. Would you be interested? And 800,000 people signed up saying yes. That could be an MVP. But I don't know if anyone on the panel wants to jump in.
Do you have, sorry, just jump in very quickly. Do you have any ideas on how I could do that online? Because I've been pitching this idea in Toastmasters, where I'm training for speech and public speaking, and people are psyched when I really go through the idea, like really, really, truly psyched.
Yeah.
So do you have any suggestions on where could I?
People will say they're psyched, but can they either put their money
where
they
pay? Yeah,
or sign up or prepay?
A membership.
Membership. If you get people to pre-buy, and of course, if they pre-buy the membership, there can be some value add for doing that, right? They become founder members, for example, right? So I think people saying they support and actually really supporting can be two different things. So maybe just if you get 10,000 people to prepay for membership, that'd be pretty powerful, would certainly help with your 5 million raise. So yeah, but I don't know if anyone else on the panel wants to add their view.
I mean, I think even a lesser version of that is just collecting email addresses, because data and a kind of customer base that is ready to go is as exciting almost, because I think spending money building an MVP, that sounds like an incredible amount of money to raise from. Have you raised anything to date so far?
No.
So your first raise is 5 million.
Yeah. Basically, I'm business advisor, so I'm doing everything myself. Well, most of the business plan myself, and some sweat equity of marketing, and then the advisors, which are Jonathan Satting from Tioga, Ray Kelvin from Ted Baker, and someone from the royal family in Saudi Arabia. So pretty good people on the back that knows how my business skills are, and through my consulting work. So yeah, it's kind of a bit of a jump into 5 million. Appreciate that, but real estate in London is absolutely bonkers.
Again, if you've got a real estate anchor, maybe that will help. I mean, if you've got a property that's part of the deal, then you've got an asset, haven't you? But yeah, I mean, 5 million would normally be quite a lot for a first raise. I mean, you mentioned 1 million sounds a bit more possible. Anything's possible when you've got the right connections. But yeah, sorry, I jumped in. Do you want to carry on with your point there, Andrea?
No, I was just saying, I mean, I think there is power in kind of building it out as something that kind of feels real, and having a kind of a database and a customer base. You know, you wouldn't have to build the MVP to get that, but it's still very valuable.
Okay, so like email lists and maybe influencer leads that could be.
Yeah, sign up to be like first customer, kind of, you know, anything from a like almost a teaser campaign, which it just in a really simple way explains the, you know, the business all the way through to kind of something that kind of helps people really understand, so it can be more immersive than that. But I think it's the value of having a kind of a big database, and kind of already there being excitement and kind of traction around the idea.
Yeah,
it's
great.
actually a really good point that people overlook often. You know, you just need some proof of concept. Like on our content on the Purposeful project, we recently got just over 150 million views in 4 weeks, and someone offered to invest in us on the basis that it's seen all the views that we were getting on our content. So, you know, views on content can actually be, you know, leveraged as an asset these days, right? So the email database for sure. If you've got a client base, you know, so work on building these things up in any way you can, and that will definitely help you. But maybe, you know, what the panel mentioned today, you need to build momentum, and 5 million, unless you've got the right contacts. So it sounds like you've got some amazing contacts there, but it would traditionally wouldn't be something I'd advise. It's a bit of a big number for your first raise without any proof of concept. But get proof of concept, then anything's possible.
The only
small thing to add is, like, the term community is like banded around like a lot, but there are lots of brands that have started more as kind of genuine information sources. So if this is a new idea combining, you know, things which have never been done before, starting to build an organic community, you know, even if it takes a long time, you know, lots of brands have then kind of got launched products off the back of communities when it hadn't been their initial plan to do so. So I think it could be a different way of starting.
Yeah, thank you.
Such good advice. That you know, I invested in a company called Heights. They're a vitamin for your brain, and they actually started the first year of their life. They were just a newsletter. Every single week they would just put together a newsletter letting people know how to bring nutrition to the brain, and they built up 100,000 people in their mailing list. And then when they launched their business, they did crowdfunding, and they raised £1 million in 2 minutes because they had the email list already. They were the fastest crowdfunding raise at the time ever, and they did it all on the back of building up a main list based on a newsletter. Yeah,
amazing. Thank you.
Cool. Okay, and then just looking at the screen, hopefully I'm getting this not wrong in the order, but Jack Mangles, and by the way, panel, I know you guys are so busy and you've given up your evening. We've now run over time a little bit, but if you have time to stay and listen to some more questions, you are welcome, but you're not obligated in any way. So if you have to go, feel free. But Jack, do you want to unmic and ask your question?
Hey, can you hear me?
Yep, we can.
Yes, perfect. So I've got 2 questions, if that's all right. One for Johnny, as well as yourself, Simon. We sort of spoke about I think it was the CIS grant earlier on at the beginning of the call, around sort of raising that through the HMRC route. I mean, is that only available at, you know, pre-seed, or can you raise it sort of later on in the stage of sort of the business? So we've got a website built pretty much ready to go. but we're now looking to raise sort of 20 to 30k to sort of fund our marketing push. Does that have to go through, can we sort of leverage a assist grant for that?
Yeah, okay. Quick clarification. It's not necessarily a grant. It's if you get investment,
yes,
it means your investors can get some cash back. And yes, it's available. There's some rules around it and a ton of data, a ton of information online about it. But broadly, yes, the SEIS scheme runs from like it's the first 2 years of trading. So trading doesn't necessarily mean the day you incorporate. It rarely is. It's actually the first day you start going live and selling to customers. So you have 2 years from that date in the UK to raise under SEIS, and there's a limit up to 150k. After that, you move on to EIS, and that can run 7 years and runs up to, I think it's like 10, 12 million. So for most of your early stage raising, unless you've been around for 10 plus years, in most cases, you'll be eligible and you can take advantage of that. Worth having a look. But if it's a website, more often than not, you'll also be eligible. So yeah, worth having a look.
Thank you very much. I'll take a look into that. And then secondly, for Adrian, you spoke about sort of ROAS earlier on. Obviously, so we're looking to raise 20 to 30,000. Obviously, the way our business will operate, sort of ad spend is going to be absolutely key for us to build a client base and to drive sales through our website. When sort of speaking to an investor around obviously the metrics, obviously that's going to be the key one for us. Calculating that based on a forecast is going to be quite difficult because it's sort of, I think we said earlier on about putting a thumb in the air. Is there any way to sort of limit that to be realistic in a way rather than just saying, look, I'm spending £20,000 on this, can I expect a 2-to-1 ratio type thing?
I mean, you can run really small scale tests to determine some kind of ROAS. You can also preset ROAS so that you can actually set up your ad campaigns to only deliver positive ROAS. But it just means that you often miss out on other valuable traffic, so it might not be the best approach. You can read loads online about kind of paid marketing campaigns. I think putting a kind of forecast in and just saying there will be a kind of a positive ROAS, like you're just aiming for more than one just to kind of get you to keep going. You don't need to show like massive ROAS. I think where you do show a big ROAS is because you need to genuinely have, run a test, be able to show the results, even if it is a very small scale.
Okay, perfect. Thank you. That was sort of what I didn't want to get into a position where it seems higher than or unrealistic in a way without having some results to show that.
Yeah, I mean, there's different ways that you can kind of segment things, but there are terms, especially when you get into things like PPC, where you are more like defending a positioning or a term, and that it might have a negative ROAS, but it's important for the brand. And then if you are literally looking at kind of conversion of traffic and things, I mean, lots of factors kind of go into it, but making sure you've got all your tracking and everything set up as well is important, so you can actually like learn once the campaign is live and see what insights are kind of available.
Okay, thank you very much. Thanks.
Side point, have you trademarked Mentor Me? Should make sure you trademark that. That's a good name. Okay, so next up is, again, please forgive me for saying this wrong, but Shahina.
Hello there. Yes, it is Shahina. Thank you so much earlier. It was really interesting. So my background is in medicine and nutrition. So I'm a nutritionist as well as training to be a doctor. And what I'm actually building at the moment is a cross between Headspace and Babylon Health. So it's for diagnostics. It is a case where I've already got a sort of not an email list, but it's more the Emergency Medicine Society at one of the large hospitals in London. They're actually going to trial that as well. So it's more an informal type of thing. So it's basically their doctors and their medical students are going to have a go and see if that's going to ease stress, as well as any sort of stress-induced illnesses or ailments that they've got. And what I have experienced prior to this, I used to be working as a fund manager. So that means that I'm also in business as a concession manager. So I do have experience of marketing business. So I don't really need a huge amount of external marketing professional help. So the thing I'm actually requiring is more of a board of advisors, and also a direction in terms of fundraising as well going forward. So I'm not sure where to begin with that and who to go to for that as well. So I think it's something that really needs some advice on.
Yeah, so I'll just quickly jump in and say, it's not who you know, it's who you ask. And I actually know Ali Parser, who's the founder of Babylon, an amazing individual. Done everything you're talking about, built a board of advisors, raised money, listed, as you know very well, I'm sure. But I mean, getting people like him on your board, I know him and can consider him a friend, because 3 years ago I asked him to come on my podcast and he did. And so, I'm not saying create a podcast, but it's too many of them now. But certainly creating a way to make relationships and making that kind of target list of the people that you would love on your board of advisors and going after them. And I have also found in my platforms in the past that my advisors end up being my investors. It was mentioned earlier, you need a 50% pre-commitment. And I've often done that sort of thing through my board of advisors. So I think you're going in the right direction. I don't know if anyone on the panel wants to add their view.
It sounds like an interesting business idea.
Yeah, absolutely. No, it's scalable, and similar to what Simon said. Yeah, ask. As a founder, you almost need to learn to become a little shameless, and that's not a bad thing. It's actually quite a good thing. Be able to ask for help, and also helping the next person up as you go. It's why I love this community broadly. So anyone that you find aspirational, anyone you think might be interested and has experiences in this area, they're only one LinkedIn message away, or find someone who knows someone. And you'd be surprised how quickly you can get a few people excited. Always make sure that they are as value add as you first think they are. But yeah, that's the first way to go about it. And it's similar when looking for investors. I know it's one of the hardest parts, but when reaching out to potential investors, you want to start with, here's why I want to speak to you. I'm not spraying praying to 1,000 investors hoping one of you might open my email. It's, I have specifically approached you because you have experience here. I think it'd be really valuable. There's also the old adage, ask for advice, get money, ask for money, get advice. Ironically, we're people asking for money, we're giving advice. So maybe we should just ask for help from people we respect, and see how far we can get with that one.
Yeah, that sounds really interesting. I mean, I would also love to speak to Adrian a bit more about it in terms of investment as well. I think it's something that would be really interesting to do now.
Yeah, definitely.
And
send me a LinkedIn message.
yeah, absolutely.
But I do think that's, it sounds so obvious, but we are, as investors, looking for we are assessing a large volume of investments. Like there won't be many LinkedIn messages or decks that get sent through that aren't read by someone that is making a decision based on the investment criteria. And I think Johnny's point is really, again, a very obvious one, but please, no one send out like automated standardized emails and messages, because they just don't go down. Either go down very badly. I literally just press delete on them. And also just explain in one line what you're doing, and in a really simple way, because sometimes I'll get these like massive emails or messages about something that sounds kind of interesting, but I still have read the whole thing and have absolutely no idea what the business is.
Okay, thank you so much. Really helpful.
Yeah.
Actually, just a really quick one. Do I need to get SCIS registered for this as well before I even approach an advisor or investor?
It can run hand in hand on those ones. HMRC don't like purely speculative applications. They want you to show that you've at least got someone interested in using the scheme if they go ahead and review your application. Of course, it takes time. So it can run hand in hand. Like as you're going out for initial investor conversations, is a good time to be starting to square up the SCIS so that each run in tandem. And as those conversations go through second and third stages, they can first inquire at the beginning, hey, is this eligible for the tax relief? You can say, I'm in the process of doing it. And then when it gets to stage third meeting and they say, great, I'm interested in 50K or the amount they're going for, you say, actually in that time, I've been able to lock it in, and we put your name down as a potentially interested investor to do so.
Perfect, thank you. Thanks so much.
Great work. So next up, Paul Marston.
Hi there. First of all, excuse the facial hair. It's a Movember effort, but makes me memorable. So there we go.
We weren't judging. We weren't judging.
I just see myself sat here with this massive tash. But anyway, my question was around self-funding versus raising. So to give a little bit of context around that, my business, we only started up last month. We spent 9 months building an MVP, building up a community of practice amongst our target market. So we have put a lot of effort in, but we haven't so far been able to raise any money. And we are out there looking for investment. How is that viewed by potential investors, one versus the other?
Happy to weigh in initially on that one. And I would say broadly, it's a good sign if you believe in your idea, not just with your time and sweat equity, but also with some of your own hard-earned cash. And there is a balance to be struck. If you're going through your first raise and there's a 20K founder loan, it might be that it's purely just money you're investing, but will in turn create value in your equity that you will write off. That's fine. Or alternatively, it's fine to have a founder loan, but you want it to be relative to raise size. It will spook investors if you have a 300 or 500K founder loan against a company raising something like 150 or 250. So a bit of a balance, but it is good that you have that commitment, and actually bootstrapping, if you do have the means to do so, can sometimes allow you to almost skip over the pre-seed stage that we're talking about, get to a point where you now have enough traction in one form or another. You'll hear me say that word all the time. We discussed it in various elements. Like traction can be everything from mailing signups to initial customers to just views, as we talked about. Putting your own money in, I would say, is broadly like a sign of commitment for investors. Just try not to stack up the founder loan bank too heavily when you're going to investment, just to not spook them.
Thank you. I mean, as far as actually what we've committed to it, it's obviously been a time thing. We haven't fully put a monetary value on that. Would you be explicit in attaching a monetary value to that in the deck, for example?
It depends if you want to be repaid that through one form or another. It typically, founder loans you expect to be money in, just mainly because from putting in all this time, we then do hopefully a successful raise, which values the company at $1.5 million. And let's say following that raise, you own 80% of it. It's all very much on paper, but you now have equity worth 1.1, 1.2 million. And hopefully that will continue to grow. So it's been a lot of blood, sweat, and tears, but that in turn has hopefully now created something that has tangible value, which will one day realize.
Thank you.
Thank you for your effort on Movember. I did it 2 years ago and got people laughing at me in the street. So I'm not doing it this year, but well done for doing it, mate. And hope that was useful to you. We've got a few more and then we will close this session. I really appreciate the panelists sticking around. Lisa, you're up next.
Hi, sorry, my phone was playing up beforehand, so thank you for letting me come on again. I am complete novice, I'm not going to lie, like all this business terminology is kind of giving me a bit of a headache because I've never done any business before and completely thrown myself into the deep end, and I'm learning so much from this. So thank you for, giving your time and all this content. So briefly, I'm wanting to set up also a charity as well as a business. So essentially my charity will help children in mental health, and I also want to, my vision is to have a community bus. So how do I obviously get the initial funding from the government and crowdfunding and all this kind of thing, but how do I sustain it as a business?
Okay, so it's a difficult question to answer without all the information, but I'll just say that I think your project, when you describe it to me, sounds like a GoFundMe type potential structure. As it was mentioned earlier, there's many different types of crowdfunding models, and if you've got something you're talking about there, perhaps a GoFundMe can be an interesting place to start, just because you can build a bit of a community up there. I know that word is thrown around a lot, but you can build a bit of a community of people that believe in your idea and support you, and there's no equity issues. And I actually seen a lot of people go from GoFundMe to Seedrs or to other platforms after. So maybe that's something for you to look at. I mean, personally, because I'm running a platform that helps people for free myself, I run a model where I make money from one part of the business, in our case, the social media, and I take that money and I pay to then provide the facilities to help people for free with their businesses. So if you can build a revenue stream in one part of the business that can then pay for the bit that is, you know, the service to the customers type thing, I think it's quite an interesting way to go. And there are a lot of organizations out there that will fund social enterprises like yours. So that's my quick take on it. I don't know if anybody else on the panel wants to throw in their quick or their views. Doesn't have to be quick.
Nothing to add. So I agree.
Yeah, so essentially I'm wanting to do kind of like coaching. So I'm currently a teaching assistant working in a school. So, you know, kind of I'm exploring that avenue as well, obviously getting other schools on board, doing seminars and webinars and, you know, after school clubs and stuff to teach in that way. But what I'm apprehensive about is not being able to kind of, you know, offering all this value, but not being able to fund. Do you know what I mean? That's the kind of, yeah.
I do understand it. I think it's very admirable what you're trying to do, just to say. And, you know, I know the charity model, we were talking about CICs earlier, there is no perfect formula. Again, my personal formula is I built a platform where we help the people we care about for free. We'll never charge people for help. It's all for free forever. But then we have built a part of our business, in this case, the media business, that funds it. So maybe have a little think about that. If there's a way for you to, for example, sell product that could, you know, generate the income that you need for the bit that won't generate any income. And so maybe that's something to think about. But yeah, I mean, it's always a challenge when you're trying to do something with purpose. Again, there are businesses out there that are doing good and get a lot of funding. So I think one, Olio is a good example. They basically help. They work with Waitrose and Sainsbury's and lots of other food-related businesses to recycle food, among other things now on their app. I don't want to just say recycling food, but they do a lot of great things for society. They've got millions of users now, but they are VC funded. And they've managed to get a lot of funding for the app. So I think there is an opportunity to build something that is investable, that can get crowdfunding, but the story and ideally a model that's sustainable for you is important, and that will also help you pitch it to potential investors, if they're social investors or just general VCs.
I think also you can reach out to people just to ask for advice. You know, this is definitely the kind of meeting that I would go, you know, a couple of times a week. I'll try and put a half an hour meeting in. I know most people will be willing to. Just what's your business idea? Have, like, with more information, people can give more helpful advice.
Okay. Yes, I would need, you know, like possibly a business coach or someone to kind of help me. You know, like I said, I'm not up on all the terminology and all that kind of thing. So just kind of have that guidance as well in this area. So yeah, thank you.
No problem. Again, we'll put the link to our Discord in the chat. And there is 2,300 entrepreneurs. A lot of those people there have made it already, and they give their time for free to help people. And there's a lot of knowledge in there. So jump in there and just mention what you need, and there'll be someone there that will help you, I'm pretty sure.
Brilliant. Thank you.
All right, you're welcome. And I put myself on mute. I'm such a professional. Aromal, you've been patiently waiting. How can we help you?
Hi, I'm from India. We have a business plan for, you know, creating zero barrier tuk-tuks, or you can three-wheelers that you see in India, auto rickshaws, so that enables. There is a lot of differently able people in India, around 23 million of them, and 70% of them are actually unemployed, and 40% of them are, you know, with locomotor disability and can be employed. So when we thought about a solution and what we can find, we thought about the tuk-tuks, because that's one way to get financial independence and to empower them. So we created a kind of what you call as MVP, or you can call a proof of concept, a tuk-tuk, but that with 31K pounds with our own bootstrap funds. But the thing is, we are very finding it very difficult to raise our first seed, because we have to go through a lot of certifications to take it on road, and to to make it into a marketable, viable product. So for that, we need another 400K. And unfortunately, there is no kind of crowdfunding that is allowed for businesses in India. So I just wanted to ask you, like, if there is any solutions that we can find in UK, because we have one co-founder based out of UK in terms of she just joined. So even she was not sure. So I thought I'll just put that question across.
Yeah, I can weigh in on this one. And yeah, you want to cast the net kind of wide in the sense of investor you look for. It's an Indian focused biz primarily, but can be all around. But you want to find people that are directly interested in the space, whether that be finding a champion, a type of investor, easier said than done, that also suffers from, is otherwise able, or has passion, experience, family in this kind of space, that is as much as it is a business proposition, it's also something that they actively really care about and want to support. So that's one side. We talk about crowdfunding. There are many different ways to raise, and the vast majority of funding rounds are done via traditional venture capital funds or via traditional angel investors. And that goes back to you want to get out there, reaching out to people that you would actively be interested in having as an investor. It means going up to meetups and talking a little bit about what you want to do. There's like, the main thing here is to find the right type of investor for what you're trying to build. I get the concept very quickly. That's always a good sign with a business idea. So we've built a bit of a proof of concept, keep building up those numbers, and we just need to be actively reaching out, not just for crowdfunding, but to business leaders in the area, to business leaders here, and once you get one, you get two. Once you get two, you get five, and suddenly it snowballs from there.
Just wanted to ask something else. Like, is the ask too much for a seed fund? Like 400K, I've heard your panelists say 18 million is in crowdfund, but we just need like 400K. Is the ask too much, or we can even kind of stage wise put that even stage wise, like first 100K we reach there, and then we reach the next stage, etc., etc. So
that's a tough one to answer, because it will go. Actually, I'll let you hop in, Adrian, because it's a tough one.
No, I was just going to say it is hard, but that is within the range of what would be classified as seed. So if you've already kind of put a little bit of money in yourself, you've built an MVP, and that is a kind of, if that's how much you need for seed, that falls within the range of seed. So yeah, I wouldn't. Okay. I'd give it a go and see how you get on.
Yeah, it sounds like a reasonable amount of money. I think, as always with these things, every investor will have a different criteria, but if you can show that 400,000 in takes you to a certain point, and the investor can get excited and comfortable with that, then there's a lot of people. I mean, you can do
we believe we can start. We can have the capability to cater to around 1,000 to 2,000 differently able people. In terms of, we can have the infrastructure to make the tuk-tuks, make 2,000 tuk-tuks, in that sense.
No, I think it sounds like a good idea, and certainly consider raising that money in the UK. If you've got someone who's based in the UK, could be pretty interesting. I think.
Can we ask them to connect with any of your panelists, because you have crowd?
Again, like Andrea said earlier, I'm saying your name wrong again and again. I know I am, Andrea.
You can call me Arrow, is fine. Arrow, you can spell it as Arrow, that's fine.
No, all right. Well, I'm getting everybody's name wrong. It's just one of my skills. But you can go read again. We'll put all the links in the chat. You go read all the websites these folks represent. You'll see what their criteria is, because that's what was explained earlier. That if you get to know the investors and what they're looking for, if you've got a comparable company to you, you can go on something like Crunchbase and you can see who invested in them. Try to understand who the potential investor could be, and that's a good way of like reverse engineering. It could be one billionaire in India who wants to solve the problem you'll solve, for example. It could be, but maybe break down who would be the right investors for you, and then you can also then go and seek what platform might be the appropriate platform to raise money on. Again, everyone will read emails or messages that you send them, but you don't want to waste their time or yours. You want to maybe send the messages to people that it's actually going to resonate with. But yeah, I have a good feeling about what you're doing, and I'm sure you'll raise the money.
Thanks.
Yeah, good
Okay.
luck.
Thank you so
Join.
much. Yes.
Right.
Yeah.
No problem. Last but not least, Stephen, blow us away with the most amazing question. No pressure. What can we do to help you?
Hi there, Simon. We've spoken before. You probably remember me, the one with the dog. Right. Okay. I have been offered some funding. Luckily enough for me. The situation is, though, is that the way they're looking at it this moment is they want become a trust. I got my microphone. Is my microphone? Can you hear me, guys?
Yeah, we heard you. They wanted you to become a trust. That's what we
Yes,
heard.
correct.
Yeah.
Basically, that was the only way that they're actually going to offer me the funding, is in actually become a trust and have like 4 style of basically, like you got managers and whatever else. As in, forgive me, I'm getting confused. I'm dyslexic, like yourself. But the situation is with it all, I just don't know where to turn with this. As I say, I just trying to understand how I'm going to actually physically do things. For example, I want to, we were discussing about angels and whatever else. Where exactly do we actually look for this? Is it something on our Discord that we can find, where we can ask questions about how we locate people, if you understand what I mean, regarding this?
Yeah, again, platforms like Cedars, Kish has now left, but platforms like Cedars have investors, but equally, if you can build up your own pool of potential investors, then that's good. I mean, there's just so many different ways to find investors these days. There's lots of platforms out there that are public knowledge, like Angel List, for example. I'm on Angel List. And I think there's about 300,000 angels on there, and what companies they've invested in. So the companies I've invested in, the 76 businesses I've personally invested in, are all listed on platforms like Angel List, so you can see what I'm interested in and what I've invested in. So there's platforms.
Yeah, I know you're mainly interested in basically on the learning side, which I appreciate 100%.
Yeah. I mean, exactly. Everyone's got a different criteria. I'm trying to fix the education system, so
that's great. It's fantastic, that, especially when we're with those people who've got dyslexia. But as I say, going back into the conversation, is that okay? So I've managed now to get some sort of funding, but it's not enough to actually start my business up and running. They've turned around and said they can, because it's a community thing. Can you start up a trust and get some heads in there, if you understand what I mean? So I need 4 people to set it off. Is there anything? I don't really want to go on the charity side, if you understand what I mean, but I do in another point. How do I go about getting funding for that?
Yeah, I was going to say I want to weigh in here, but I actually don't know how helpful it can be. It's a slightly unusual structure to set up a trust. I presume it's in relation to some form of, like, it sounds in line with a government grant type thing or otherwise.
What my idea is, I'm planning on opening.
We lost your mic again.
Yeah, sorry.
Sorry, everyone.
Somebody started calling me and I'm on my phone.
Thank you so
Sorry
much
about
for giving up so much
that.
of your time. I really appreciate it. You've been awesome tonight. Thank you so much.
Thanks. Bye, everyone.
Right, see you.
Yeah, as I say, my business plan is basically to open a dog training centre in Manchester, with everything dog, if you understand where I'm coming from. And the situation is that the way that I've sold it, it comes across as a community thing. And they were saying, well, can we not open you up as a trust? And it's just like,
yeah, I understand, because we've spoken about this before. I don't want to take up Johnny's evening, because this isn't really his area.
No.
Unless, Johnny, you want to throw in. I mean, I think
unfortunately, it's not one I have expertise in, unfortunately, in terms of the setup. But I'll be surprised if there's not a few resources in terms of setting one up. I'd love to help more. Unfortunately, not one I can actively do on this one.
And I'm very conscious, Johnny, you've already gone over half an hour this evening and taking up your evening, so I don't want to take up any more of your time. But look, Stephen, I think you're already on our Discord channel. I think I saw you in there. Are you on there, right?
Yes, that's correct. I actually thrown over my business plan over to you a while ago, and you said you were going to have a quick look at it. I'm still waiting for you to get back to me on that one, but I know you're very busy, so it's not a problem, that, my mate.
Yeah, I haven't seen
Okay.
it. I'll talk to Talia, who runs my email, and I'll get hold of that. And probably the best bet is let me look at that and come back to you. That's probably the easiest way to help you with this, because I need to read the detail to understand exactly what you're talking about to give you proper advice. So give me some time to get back to you on that. And I'll talk to Talia tomorrow about where that email is, because I've got a whole list of stuff I haven't got around to.
No, I know, I appreciate that, Simon, I really do. As I say, but I wish I was a bit more asking the questions what other people want to know. But it's just a case of like I'm lost myself, and now a lot of people on a lot of people have asked to give me information and how to try and get some sort of sponsorship or something now, because that's something else I've been looking at doing. Do you understand what I mean?
Yeah, I do.
Instead of actually physically getting an investor, but if an investor's interested, then that's definitely one way I want to go with it.
My instinct, my instinct with what you're doing is probably you should team up with one of the existing dog charities.
Yeah.
And
I've already done that. I've already done that.
But that will work within their structures, and might be a cheaper and a better way to do it, so you can get it up and running. But look, why don't we do this? I'll get the deck tomorrow from Talia. I'll have a look through, and then let's have a chat in the Discord channel, and I'll let Johnny go and have some dinner and relax. He's put a lot of effort into the night. But I do understand what you're trying to sort out. Let me read it, and I'll be able to give you a more thorough way forward. Okay.
Thank you, Simon, and thank you again, everybody, for all your information and help. Much appreciated.
Not at all. Nice to hear from you again.
Good to speak to you again, Simon.
You're a star to stay here to the very end with me. I appreciate it very much. And thank you for giving knowledge and supporting this webinar this evening. It's been an honor to have you here, and I personally learned a lot from you. So thank you.
Really my pleasure. Last time we spoke, Simon, we were talking about Scottish castles. I think it started round. So if you haven't got one, I reckon it's time you get one there.
Yeah, I still think about that. I do. I still. I do often end up on a property website looking at Scottish castles. It's still on my list of things to do.
Sure, it will come soon. Lovely.
Thanks
so much. And thank you everyone for coming along.
Yeah, I hope everyone got something from this evening. Again, if you need any further help, you can join the Discord. The link's in the chat. I'm now heading over to TikTok to answer people's questions on TikTok. So I will see you guys perhaps on TikTok, certainly in Discord. And yeah, have a wonderful evening, everybody.